Hey, welcome to my YouTube channel, Making Sense of Credit, Making Sense of Making Money Online. I'm Tony Hill. I'm a personal and small business credit coach, online marketer, YouTuber. Hey, welcome. Hey, this is a quick video. I'm talking about the Resilient Index credit score. Another score actually introduced by Fico, especially kind of a score during the downturn that we're facing right now. But look, before I jump in, hey, if you're not a subscriber, please subscribe to my channel. Smash the like button. Hit the notification bell for upcoming content. Make a comment if you like. And most of all, share this with your friends and family if you think it's something they can use. All right. I always try to bring you news you can use. Hey, look, this is really kind of regarding, kind of what we're going through. Another thing that FICO came up with to better help the lenders. A new scoring system that predicts how well you'll get through the current recession. The Resilient Index is a new rating system that rates you based on how well you're likely to bounce back from an economic downturn. The company behind it, of course, is FICO. The COVID-19 pandemic is stifling so many consumer budgets that lenders are looking for warning signs of delinquency and defaults. FICO said the Resilient Index will help lenders avoid restricting credit when borrowers are actually a good credit risk, which is kind of cool if that's true. Lenders will still use your credit score, of course. The Resilient Score Index will provide additional insights in what might happen with your finances in the future. The index gives you a different score on a scale of 1 to 99. The lower, the better. According to FICO's website, a rating of 1 to 44 means you're most prepared to weather economic storm. 45 to 59 puts you in a moderate range. 60 to 69 makes you a sensitive risk, and 70 to 79 means you're very sensitive, at least able to bounce back. And then I went on my FICO. If you do have a my FICO report, go down, scroll down, you'll see your resilient index score on there. I looked at one of my clients today, and unfortunately, ended up buying a large ticket item, and he was in a very sensitive. I think he was at 91%, which is, like if a lender or anyone pulls this up, they will see it. Now, when they're going to implement it, no one knows. So I wouldn't be overly concerned about it, but it could come in effect. Look, we've been waiting for the FICO 10 to be instituted. I don't know of any lenders who are using that yet. Normally, these things roll out pretty slow, but I'm guessing because it's during a downturn and because banks are restricting some of the financing that they're doing, I'm guessing it's going to, help them to make some determinations on giving people credit. So if you're looking to take out a mortgage, buy a vehicle, get a new credit or even new credit card, or even increase or keep your credit limit, your resilient index could be a factor going forward. If you're on the border of fair and good credit, or if you're on the border of good and excellent, if they're not sure, basically, this could tip the scales one way or the other. So that's why they're going to use it. FICO even suggests that many people with a lower credit score will benefit because the resilient index takes a broad view. FICO says higher resilient consumers tend to have more experience managing credit, lower total revolving balances, fewer active accounts, and fewer credit inquiries in the last year. Money experts said it will take a while for lenders to incorporate the new index into their credit approval process, kind of what I was saying. So this is a good time to review your credit profile and take steps to make necessary improvement. Some of the best ways to improve your resilient index are to keep your balances down, pay on time, of course, make payments early, so you have as much available credit as possible. Instead of paying on or right before the due date, break down the payment so you can reduce your balance as early as you can. Also, be careful about adding new accounts if you don't really need them. A pattern opening and using new credit might be a signal that your financial resilience is not stable as it should be. Resiliency. So look, the thing about it is that check this out. You can go to FICO website, or if you have a My FICO, you can check it out there. You'll see it, and they'll show you the scoring like I showed you here. But another thing to make sure you're aware of and how you move forward on your credit. But look, I just wanted to drop you this a short video. This is Tony Hill, making sense of credit, making sense of making money online. Hey, be safe, wear a mask, stay 6 feet away, and be safe. Until next time, until the next video. Peace, guys.